Welcome back. Well, Anirudh Naha from PGIM India Mutual Fund joins us now to discuss the market fundamentals, his top sectoral picks and the way forward. Anirudh, thanks a lot for joining in. This has been a market that has been so resilient over the last many weeks and months and continues to be so despite what we are seeing across the globe. What do you think is the trajectory of the market now? Are we staring at a time-wise consolidation that this market could see, or is there some sort of a correction coming price-wise?
Good morning and thank you for having me here. We believe, market returns are a combination of your earnings growth and where the valuations are. Earnings growth seems to be, pretty subdued. This quarter, the earnings hasn't been anything great. And the next quarter also, our belief is the earnings are going to, they could continue to remain pretty subdued in that sense. So the markets will, if not go through a price correction, will probably go through a certain amount of time correction. The valuation expansion which is happening is purely based on liquidity. And that just makes us a little bit of a little bit cautious in the near term.
Ola Electric, another 20% upper circuit on that. It started strong post the numbers and the new EV motorcycle launch, and now it's locked in an upper circuit of 20%. Take a look at even Brainbees, the company behind FirstCry. That's up another 6%. Paytm is, upper circuit of about 5%. So these new age tech platform companies have gathered so much interest. Anirudh, have you analyzed, say, Ola Electric when it launched? What were your thoughts? Did you participate in it? And in this entire basket, which ones would you prefer?
So without naming anything specifically, we've looked at all of them. We believe there is a long runway for many of these companies actually. But company specific, whether it is electric EV, the electric vehicles coming through or certain other areas, our focus has always been on companies where we see certain amount of cash flows coming through. And once that happens, we usually stay away from the IPO listings. We give it about 2 quarters before taking a better view on that from a longer term perspective. So some of them will do definitely very well over a period of time. Our only sense is with a 6 months lag post listing, we will start having a look at them. There are some very interesting, new age technology companies which are generating cash flows, and we do have exposure to some of those companies out there.
Okay. So when you say companies, new age technology companies generating cash flows, is it fair to assume that you are staying away from the companies that are growing on the top line but are still net loss making? I mean, is that a good way to interpret this?
Yes, it's a very fair assumption. Our belief is, you can pushing top line is the easiest thing to do. Finally, it has to boil down to profitability and cash flows. And something that we've been following at in-house is, top line is vanity, bottom line sanity, finally cash flows are reality. And especially in these high valuations, we would want to stick to businesses where top line is getting finally converted to profitability and cash flows.
Nifty IT, that's the one which has led the up move this week with a 4% up move. Well, the earnings were fine, perhaps signaling that we're at the worst, or perhaps it's very close and soon things may be on the mend. But it's not that we're seeing a V-shaped recovery. So are you surprised by the up move that we've seen in IT over the last 2 months?
So IT has actually, from a valuation perspective, has been reasonable. It has got the cash flows to that extent. When the markets have moved up, it has actually been a laggard. Earnings have been reasonably good, more company specific. But I think the worst probably in IT is over. If someone takes the next 2 quarters to 3 quarters, this probably will give you not only safety on the downside, but will also provide you with a certain amount of returns coming through. And this is a sector where we find value across market capitalization. So to that extent, we like this sector and continue to probably buy into the dips.
Okay. What do you do with some of these sectors like, say, an auto? We've discussed Ola because that is really the one that is in the news right now. But in general, autos are, it's sort of a hit and miss right now because there is a slowdown in certain pockets like passenger vehicles. Two-wheelers are not doing that great. There is a big EV adoption that's taking place. So what does one do with these traditional IC engine auto stocks?
So our sense, Sonia, is, the conventional ICE engine companies, they have still a very long way to go. I think EV per se, we'll have to wait and see what is the final form of it. Are we going through a transition where lithium is the right, raw material for the batteries, or is it going to evolve into sodium, hydrogen, etc.? Presently, over the next probably a half a decade, I think hybrid will be the technology which will be more adoptable, which has got no issues with regards to raw material availability. And as a technology, it's a clean technology. So anyone who has been able to, in the auto and auto space, who's been able to, migrate from pure ICE to hybrid, that would be something that we would be really excited about. We believe there is enough and more of scope within the ICE engine companies also. Also, the fact that there are hybrids companies both in the OEMs as well as auto anchors, there are companies available which have got exposure to hybrids, and that is a space where we would be excited about. We like the two-wheeler space, the passenger vehicle also to a certain extent. Where we are a little cautious is the CV cycle.
Okay, thank you very much, Anirudh, for joining in. We'll slip into a very short break. On the other side, we'll get a corporate conversation going. We'll invite the management of MPS to discuss their Q1 numbers and the way forward.